So I wanted to dive a little bit deeper into incentives because this is one of the areas that we get a lot of questions out at Occupiers. So figured take a little moment here to talk about incentives. And there could be two types of incentives. One that is paid at or before the lease commencement date. So let's say a moving expense that could be paid before you actually gain possession. And that in that case would be used to reduce that initial right of use asset, versus some incentives are payable after the commencement. And those should actually netted against the lease payments that you're making when they are expected to be received. This is super common for a real estate lease for a tenant improvement allowance that has different milestones. And so let's say that you will get paid 75% of your tenant improvement allowance once you do X, Y, and Z. That X, Y, and Z may not be until 9 months, 16 months, it could be way after that lease possession date. And so you have to think about when exactly we're expecting to receive it and for what amount. But there's also this other kind of area here for incentives. And if it's contingent on a future event, kind of like an incentives payable, but when you're thinking about that future event and whether or not to include it in the initial assessment of that lease liability, you want to think about if something is one, probable and within the lessee's control. If both of these are not the case, then you would not be including that in that initial lease liability. However, once both of those conditions are met, then you're going to modify that lease. It's going to be a little bit different, but don't worry, we're going to talk about this in the modification section. Just wanted to lay the groundwork that when you're looking at incentives, depending on when it's getting paid, the parameters around when it's going to get paid and how much may distinct whether or not you include it and how you include it. I actually just got a question here. It's really good. So let me answer this. So someone asked about the assessment of the lessee or lessor asset and how that impacts the initial recognition. And so before you even get to this is a payable incentive, the first step actually, and this is mostly for tenant improvement allowances, is that you have to figure out if this is a lessee asset or if it's a lessor asset. And if it's a lessee asset, that's going to be treated as a payable incentive. But if you did all of this work and you're getting reimbursed for it, but really it's a lessor asset, well, then that is going to be a prepaid rent versus that lease incentive. So great question. Thank you for asking.